Okay, good morning, everyone. I'd like to welcome you all to the Daily Energy Markets podcast. It's Tuesday, September the 9th. I am delighted today to be joined and to welcome back after our summer break Ole Hansen, Head of Commodity Strategy at Saxo Bank, Osama Rizvi, Energy and Economic Analyst at Primary Vision, and Omar Al-Abaidli, Director of Research at Bahrain Center for Strategic International and Energy Studies. Great to have you all with us, gentlemen. Ole, let me start with you. I want to look at this survey result that we put up, which was a week ago, before the OPEC decision, but I don't know if that really makes any difference because according to those figures, I mean, I think the market's telling us a completely different story. All the headlines today, a week later, our China demand has been propping up this market, everyone is perhaps depending on it to continue to do so, at least for the remainder of the year. Do you think that is really what saved the oil price to remain even in the late 60s, despite the increase of volume of supply, etc.? Ole, what's your take on that, and what's the view looking forward, do you think?
Well, I think it's safe to say that without the 500,000 barrels plus a day that we're seeing in reports that China has been buying up on a daily basis this year, we would the demand supply and demand balance would have looked somewhat differently. So yes, I think it's safe to say, fair to say at this point that China has been the key reason why these production increases have managed to get through without really hurting prices by as much as some probably had expected. I think also we have to take into account that the 2.5 million barrels plus the additional barrels we saw announced over the weekend, only part of that has yet, not the full part of that has hit the market yet. So I think this, the question that you posed there with almost half looking at the OPEC supply, I think that's still really the key one that will take determined price action towards the end of the year when we are potentially seeing a slowdown in demand, that's additional supply starts to become more apparent.
Thanks, Ole. Omar, welcome back. I mean, on that point of OPEC additional supply, yes, you know, the volumes that were announced after the meeting on Sunday are pretty small. They can adjust them in a month's time. Do you think, though, that OPEC is I mean, and then there's this whole question of, oh no, they are going to keep pumping and adding because this market share now has become their priority. Is that now the priority for Saudi, essentially leading OPEC into this new period of volume increases? And are they depending also on the fact that China will keep stocking up because that's what's helped their policy succeed to an extent?
Well, I'm not sure that this is entirely driven by internal OPEC considerations. I think that an important part of this calculus is Saudi Arabia and other major OPEC members' relationship with the US vis-a-vis Russia. So I think at the outset, when Trump's term commenced, there was a somewhat tacit, somewhat explicit desire from President Trump for oil prices to fall as a way to put pressure on Russia. And this was okay with OPEC in a sense because several of the major producers in OPEC were fed up with smaller producers or other not towing the line and cheating with their quotas. Now, you know, as the conflict in Ukraine and as the relationship to the US and Russia evolves, the pressures are changing. Also, it's not clear it's not entirely clear how the resilience levels of the shale oil producers in the US in the current climate. But I think that it would be, naive to think that this is purely market share driven considerations within OPEC. I think there is a broader geopolitical game being played, and every day as the different pressure points alter, you'll see different policies from OPEC.
Okay, but Omar, just staying with you on that, and if OPEC is doing Trump and the US a favor by keeping prices in check, you know, at this reasonable level, despite the impact on US production, that's a sort of contradiction. What is the Gulf getting in return?
Well, so first of all, the most salient.
I mean, apart from the reasoning that you just said, it gives Saudi the chance to keep increasing production and make up for what it's sort of held as a burden versus other OPEC members. But geostrategically, what is Saudi getting?
The US signaled very clearly at the beginning of 2025 that all relationships are under review. and that includes the security guarantees that the Gulf countries depend upon. And so in order to continue to curry favor with the US, the price has, in some sense increased. And, we've seen the security guarantees, well, the biggest question marks over those security guarantees emerged in 2019 under the first Trump term, when the attacks happened on Lubqiq and in the UAE, civilian airports in the UAE, and there was no response from the Trump administration. So it's a very credible threat from Trump that if you don't, appease or align with our interests, then there will be a price to pay. So yes, in answer to your question, there's that. And then in addition, you'll note that the Gulf countries are also in the group that has been subjected to lower tariffs than the Brazils and Indias of this world. And although there is a complicated calculus to those decisions by the US, I'm sure that towing the line geopolitically is a contributor to the maintenance of what, in relative terms, is favorable, favorable trade policies.
Okay, yeah. I mean, certainly the Gulf has not been hit as much, and in return, as you said, for their cooperation on oil, etc., I'm sure that plays a factor, and business relationships as well between the Trump family and the administration and investment here in the region. Osama, I saw you sort of nodding to a few of Omar's comments there. Let's talk a bit about tariffs. Start with you and talk about the US tariffs. Pakistan also has kind of received relatively mild treatment by the US. In July, I believe there was an agreement as well with the US giving them sort of a bit more favorable conditions, and not surprisingly, because Pakistan's economy is already suffering enough, obviously. But where's Pakistan's point of view on that in mid-year, well, past mid-year now, on the tariffs? How vulnerable does it feel as an economy? Is it really getting some favored treatment from the US, do you think?
Oh, well, that is a very interesting point. You see, Pakistan is certainly in the good books of Trump. And there are many reasons to believe that. First of all, there has been a very out of the blue renewed interest in developing Pakistan's massive, quote unquote, massive oil and gas reserves by the US and by the US companies. And we've spoken a lot. I've done a lot of, writing on that and research on that as well. Needless to say that it needs to be proven first that we have all those reserves. But this alacrity, this willingness to invest in Pakistan's energy sector speaks a lot about where the two countries are headed towards in the near future. Our field marshal also visited US, spoke with a lot of think tanks, had an exclusive dinner, or was it lunch? I don't know, with Trump as well. So all of these things bode well for Pakistan in that there has been a recent distance, there has been recent, some sort of issues between both the countries, some frictions, but now I think it is getting better. Hence, we have reasonably lower tariff rates as well. Now, for the point that will it help the country or not, that of course boils down to the domestic factors. Pakistan's economy right now is on the macroeconomic front, there has been some improvements. Inflation has gone down to single digits, blah, blah, blah. But the poverty index is still not doing well. Out of school children and all the structural issues still holds. I know I do, whenever I do monthly groceries, I don't see any difference. So I always say that is the best indicator for any country, that if I see any difference, I can save. So in that front, I don't know, but there has been, there is a very interesting geopolitical angle to this as well. I think what has been recently happening is that because India has more sovereign space, and right now, recently, they have refused to stop buying Russian oil. So maybe US is now thinking that they only have one ally, specifically in this region, as a counterbalance to China, and maybe they want another one. And so they're trying to, sort of shrink the periphery of Chinese and enhance their own, so that, and it
playing the game, playing its allies, its allies and foes against each other through this tariff game, of course. Ole, we talked a bit about sort of the oil support from China and OPEC. You said that OPEC policy going forward will determine. I mean, I'm sure they're going to adjust things if the price starts to drop dramatically anyway, and that Chinese stockpiling slows down. Let's talk a bit about, Ole, the US economy and macro policy impact on the oil price? You know, we're seeing a push for an agreement by most of the market that we're going to see 1-2 rate cuts this year, small ones, but we're going to begin to see rate cuts again, is the main point. And that should be bullish for oil, do you think? Finally, you know, everyone's saying how oil's lagging behind other commodities. Where do you see a rate cut impacting oil? Do you think we'll recover back into the 70s before the end of the year?
Well, I think unfortunately this time round, rate cuts are coming from a position of weakness, economic weakness, and that really is a bit of a concern in terms of the demand outlook. Because looking at these the job data we've seen recently and some of the survey data as well, it just does point that we are to a slowdown. And yes, rate cuts are coming, and we've gone from maybe 2 now, almost 3 cuts before year end. It could perhaps it could be even more than that. So I think at this point in time, the market is the positive impact of rate cuts. I don't think really will be felt in the economy as such, because the long end of the yield curve remains elevated. We have a very steep yield curve in the US, because the long end is battling concerns about inflation, battling concerns about Fed independence, and this mountain of debt that they need to service constantly. So it's not really impacting the some like house buyers in the US, which is an important part as well. So I think even though we see rate cuts, it could potentially still have a negative impact on demand if we see further deterioration in the job market.
And what about how it impacts corporates and corporate lending and companies sort of functioning, if you like, in terms of the US economy, you know, the large loans and industrial manufacturing activity?
That will start to be negatively impacted. The problem with, obviously, when we're looking at the US and looking at the stock markets, we're seeing a market that is pumped on an AI craze. That perhaps is also running close to its final furlong, because there is a point where questions will be asked about the billions of dollars being put into projects and whether they're actually going to be profitable or not, and whether it's actually going to improve profitability and productivity. So highly skeptical about the whole AI craze. But right now, that is really what is pumping up the equity market, and we forget to look underneath the bonnet and see what's happening further down the supply chain or further down in the real economy. And that doesn't seem to be, that doesn't look well, I would say. Talked about food prices, and food prices are a problem everywhere, even though we're not really seeing it in the official numbers, but the underlying
They're
price
definitely everywhere. Everywhere. Here in the Gulf, we see it every day as well. And of course, you know, if we get those rate cuts, I mean, that 3-4% inflation in the US is only going to go up, isn't it? So across the board. Omar, back to the Gulf. Let's talk a bit about Iran, because since June, all's gone a bit quiet, at least to us observers, outside of those closed rooms. Where do you see that dynamic developing towards the end of the year? You know, what is the situation on the ground, would you say, in Iran at the moment, domestically, and, you know, in the context, obviously, of Iranian oil exports, which from what we can see are still going and still managing to get out, China's still taking Iranian oil, etc. What would you say your outlook is for the remainder of the year? Just the same status quo as we are in now?
Yeah, so I think that, you know, we're entering a period of we call it self-reflection, if you will. I think that both Israel and Iran are licking their wounds after the you know, intense 12 days of combat they had earlier in the summer. Both the event was incredibly costly economically for both parties, and so neither is going to be in a hurry to get involved in another and as you know, Israel's already reinitiated some major combat activities in Gaza, so it's preoccupied there. So I think that Iran, for the time being, will probably be focusing on a couple of things between now and the end of the year. The first is deciding what it wants to do with this nuclear program. Is it going to escalate? Is it going to do so secretly or openly? Is it going to fortify it? These are the key sort of questions that it'll be asking itself. That's on the nuclear front, and then also on the diplomatic front, it's going to be looking to sort of reassess its relationships. I know that, you know, Iran was probably somewhat surprised by the lack of material support forthcoming from both China and Russia during the war. And so it probably needs to reassess its supply chains and rearm itself. It probably consumed a lot of its missiles and a lot of its batteries and a lot of its launch devices during the combat. So it needs to be reformulate its defense strategy in light of the fact that some of its major backers in the international arena restricted themselves primarily to diplomatic and sort of verbal support and declined to offer material support. And so what this and then obviously you're seeing, I think there was a BRICS video meeting this week. You had it in the summary.
Yeah,
and
protesting against tariffs. Yeah.
Right, and that's going to be focusing on, they're going to be contributing to the continuing global rhetoric emerging against the US's, unilateral trade policies, which is something that favors Iran because Iran's been, under the yoke of US sanctions for, 50 years now, and they keep getting more and more stringent. You just mentioned them regarding the oil. So I think these are the issues that are going to be preoccupied, but because these things are more sort of behind the scenes or secret activities, that's why people like you and me are not going to be able to spot them in any salient way in the daily news.
Osama, let's talk back to Pakistan and talk a bit about progress. I mean, you mentioned, obviously, you touched on the economies, mentioned oil and energy, and obviously the cost of living. The IMF deals are looking, relatively, I mean, the reviews of the IMF loans that Pakistan's been getting, you had another review in the summer that looked positive in that way. And does that mean that, we're going to get another tranche, another loan soon? How's that looking for Pakistan? Things look much more positive than they did a year ago, don't they, from a IMF lens?
Yes. Before that, would you allow me to just pick up on what you said in the beginning of this round? And it relates to this question as well. When we talk about the US economy and, it's giving a lot of confusing signals, but very quickly, I think the next big question for the US oil industry, as you asked, is what and how will it behave if and when prices plunge below 60s? Because overall, I think so far diesel has been providing the floor to the oil prices. And this is going to be a big question. And so far, the frac job count, the actual number of completions has surprisingly been almost the same as compared to the last year. So US is producing the same oil with a $20 less oil price. So that is a very interesting dynamic.
And lower rig count.
And the lower rig count, of course, and the frac spread count as well. And, tying it down with where the US economy is heading, if there are rate cuts and we get a little bit of good parity on the PKR and dollar parity. So I think that is going to the biggest thing, because the cost of living crisis here in Pakistan is essentially related to the imports, because we are an import-based economy. If PKR of Pakistani rupee appreciates against dollar, which I'm expecting it will a little bit, it is holding its ground. I think the projections of IMF and other World Bank are a little bit on too positive side, very rosy. But still, I hope and I expect that there would be some cushion. But one thing that has come out of the blue is the recent flooding here. If you have been following the news, it has been extraordinarily devastating. No one could even, no climate model was able to foresee what has actually happened. It is still raining. So that has set Pakistan back to the tune of $30 to $40 billion. And I believe, the biggest impact, as Ole said, this is going to be creating is on the food prices. And the food inflation in Pakistan has already been a little bit on the higher side versus the CPI. So I'm worried about that. I'm worried about the vector-borne diseases and the pressure it is going to put on the hospitals and on the clinics and the medicine side. And then I'm also worried about the overall cost of inflation, because around 250,000 people have been displaced.
Absolutely.
So all of these are going to, play out in the overall budget.
In the real economy. I mean, the cost of climate change is not in doubt. I was listening to a podcast the other day of a Russian scientist who was talking about AI and, where do we need to deploy the latest innovative AI solutions and climate. He of all the world's problems said, if we don't deploy it towards climate change solutions, then there's no hope for anything else. Ole, Osama mentioned the rupee versus the dollar. I'd like to get your view on where you think the dollar is going. This dollar weakness that has been talked about all year, that it's going to accelerate as other alternative currencies also make headway, Bitcoin, etc., gold, we continue to see appreciate. Do you think the dollar index is going to continue? Obviously, if we see rate cuts, that's another way to bring it down. But where is that going, do you think, also in the context of how the US economy is doing? Oh, you're on mute, Ole. Sorry.
Sorry about that.
That's okay.
Yeah, well, we've just been through a period here where the dollar has tried to consolidate, and but as just looking at how the kind of rebound we've seen, it's almost been non-existent, basically indicating that even though we've had other issues elsewhere, we've had the political issues in Europe, we have the crisis in I would say in the UK as well, Japan mentioning as well with the government there. Despite of this, the dollar has not really managed to gain some ground, and that tells me that the underlying trend is still towards the lower prices, and we could see the dollar deteriorate or weaken further into the autumn and winter months. So we're already seeing a bit of weakness today, and obviously, if we do see these rate cuts, while others may start to pause their rate cutting exercise, then that would weigh even further. So I think with that in mind, looking for a weaker dollar in the coming months, supported by the rate cuts, but also the rate cuts, we have to remember, they will come at a time where inflation is still relatively high. So the Fed basically is forced to change its focus from price stability to economic support. And that is one, I think, that would potentially could weigh on the dollar in the first place.
And what about Ole? I mean, again, excuse me if I have my sort of economic facts not 100% straight, but what about looking more medium term at the dollar as a sort of obviously reserve currency, as the currency of trade exchange? And, we saw comments by China earlier this week about accepting payments, about allowing Russia to make payments in the Chinese currency for certain trade. Do you think that train has left the station and we are going to see other currencies or alternative currencies such as Bitcoin and commodities like gold play an equal measure strength part to the dollar as we go forward? There's no turning back.
Yeah, but I think at the same time, there's no alternative really in terms of size and size of the market and the liquidity. So it is obviously a discussion that will continue to intensify over the coming years, and eventually we may have some alternative solution. But I think for now the dollar is just all over the place when it comes to global trade, and even though we are making inroads in certain parts of the world to reduce the dependency, it will still be there for the foreseeable future. So I think that it's an ongoing discussion, but we're not suddenly just saying they're going to see the dollar disappear from that perspective. I'm worried, obviously, watching the debt market as well, with this extreme issuance of debt continued in the US, which is in dollars, and that appetite obviously needs to be there for these bonds, and so overall. Dollar weakening, but will it lose its status as the global currency? I don't think so. And the whole Bitcoin, yeah, don't even get me started. I would probably upset quite a few listeners.
Yeah. Okay, there's our survey question, which sort of takes us back to the first topic we handled at the top of the hour, which was at 10:30, which was that, is China. It saved the oil market so far with its 500,000 barrel a day, build up. Is that going to continue through Q4? Certainly an important element amongst others. Omar, let's talk about, again, back to, the oil price. And obviously now that we've seen it sort of settle into the 60s and some people saying at APEC this week that, it's got another $10 to drop before it goes up again. But others saying, no, it can't because everything else is going up. So it has to follow, regardless of sort of, I suppose, fundamentals, physical fundamentals. How do you think countries and economies like Saudi Arabia are looking at that when it comes to their economic planning? We saw some, decline in commitments on those big projects being made or adjustments. And Saudi's obviously trying to get as much revenue as it can at the same time. How does Saudi tackle this sort of new lower range?
So I think it's important to note that unlike previous dips that we've seen in the last 5 to 10 years, at this stage, Saudi Arabia is fully committed to Vision 2030, and it's something which, if you visit Saudi Arabia and if you speak to the people who work in the different government entities, it's something that's been completely institutionalized and absorbed into the what's it called, national psyche. So as a consequence, all that's happening if the oil price goes up or goes down is maybe a slight change in the schedule, but it's not going to be something that brings about any fundamental change in policies. They're still plowing ahead. As you noted, when there's a decline in oil prices, that may create some transient liquidity problems, which may lead to a change in the timeline for some of the mega projects. But in essence, the mega projects are all going ahead. They're all involve sort of visions and conceptions of economic activity that are not dependent upon oil prices being in a certain range over the coming period. And if you look at the debt, public debt of Saudi Arabia, it's quite low. I think it's about 40% of GDP. So they've got a big buffer in terms of issuing international debt, and that's something they've been doing quite a lot of late. So bit of a boring answer, but apart from some ebbs and flows in mega project timelines, I don't think that there's anything. As long as it stays above 55, then really I don't foresee any substantive changes. Of course, if we get something like what happened in COVID when it went to, I think it was $20, then
we'll all buy oil, won't we, this time around? Yes. Yeah. So 55, you think, would still be manageable. As you said, their debt situation is comfortable. But just, Omar, before I leave you, just on the shipping front as well, tell us if you have any opinion on, we've seen one or two activities in the last week or two again in the Gulf of Aden, and Suez traffic is sort of not really back to normal but flowing. Do you think that shipping traffic from a geopolitical sort of security point of view is watching out, or has it settled into a new normal? What do you think?
No, I think it's definitely not settled to a new normal because as you saw last week, Israel took out a selection of key personnel, key leaders from the Houthis, and that kind of action is not something that's going to be just sort of ignored by the Houthis. They're probably going to wait to strike back, and so the cycle of escalation is by no means over, and also with ostensibly the reason for Houthi involvement is the military activity in Gaza, which is continuing and escalating as we speak. So no, I don't see the situation settling down in any sense, and on the contrary, I see it potentially flaring up at any second, and that's why many suppliers have just decided to just for the foreseeable future ditch the Red Sea and do alternatives, and the US. Foreign policy stance suggests that they're not as committed to maintaining the security of the Red Sea as they perhaps were under Biden. So this is really a bit of it'll continue to remain a hotspot for the next 6 months at least, I imagine.
Okay, Osama, just back to you. We've mentioned obviously Chinese demand, specifically, stockpiling and, putting aside its China economy performance, which has been steady this year, but, nothing out of the ordinary of what was expected. Just looking a bit more medium term from a Gulf producer's point of view, do you think that their mind is already shifting to the fact, first of all, they're obviously maximizing to sell oil in the next 10 years? That seems to be the commentary, as that plateaus in general. But of course, China's oil demand is also going to start plateauing. And, Gulf producers should be looking perhaps more seriously at countries like India, large consumers in Asia and others. How just from your point of view, just generally speaking, how dependent or important do you think it is that they start to look at that if they look at a 5-year outlook versus the next year or two?
Very interesting. First of all, China's trend for stockpiling may continue for 2026 because they still have in the commercial inventories, still have like 30-40% space left. Second, and the prices are expected to go down, and they're a very price sensitive buyer. Secondly, yes, not only that the Gulf countries should be looking for other options. They are the tiger cub economies like Philippines, like Vietnam, Pakistan at some point in the future, and all of these countries that are going to drive the oil demand in the near future. According to the even IEA, the non-OECD countries, and among those, India, minus China, India, Malaysia, and all of these countries will be the ones. But China has also started to sort of diversify its oil imports, and recently it absorbed around 40% of Brazilian imports. That is something to look into. It speaks a lot about the future trend as well. So definitely, I think diversification is the key. And I believe, apart from electrification, which only accounts for 18% of the final primary energy mix, we need to realize that oil, whether we like it or not, is here to stay for so many other reasons. And livelihoods.
But in
and
China,
actual life depends
electrification
upon-
is moving much faster than anywhere else.
Yes,
So
yes,
that's
it is.
definitely a sort of tips the balance a bit more than other countries. Ole, before we go, it is already 11:01. Your outlook, there's our survey result. It's pretty almost equal, 58 to 42% on Chinese support for the oil markets. Gold hit 3,600 this week. Again, do you see that, like the dollar, that's where it's going to sort of settle, or could we see that become an even more popular hedge in this very uncertain macroeconomic future?
You turned your eyes away from the screen for 2 seconds, and now it's 36.50.
Good.
Yeah,
Well, not good, but I
so-
mean,
Yeah, exactly.
that's
So
positive for my question. Yeah.
Indeed, and I think we just have to look at the precious metal sector generally, the performance in the last year, just to gauge that the world is not okay right now. We're having many uncertainties that drives investors towards a dead metal that gives you nothing but worries about someone coming and steal it if you can't store it safely. I think that trend is not over yet. Incoming rate cuts may not support the economic growth, but it may sort of support silver and gold because the funding costs come down. So I think it's overbought right now, but the trajectory is still towards higher prices. Some of the demands we've seen in recent years do not look like they're saturated just yet. So I think it is a reflection of a world that is not okay, even though on the surface it looks okay if you look at stock markets and investments and so on. But generally it highlights worries, and those worries needs to disappear before we start to see a top in the market.
Ole, thank you so much, and thank you to Osama and Omar this morning. Thank you, gentlemen, and everyone else for joining us, and have a good week ahead. All the best.
Thank you. Thank you.
Thank you.